Welcome back to Trading 360. I'm Nicole Petallides, live on the floor of the New York Stock Exchange. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Don Kaufman, co-founder at Theo Trade. Good morning to you both. Don Kaufman, how are you feeling? We've had plenty of volatility for you, though the last 4 days have been up, and away. A few of your thoughts, please.
Yeah, this is still very much my type of market. Look, I like two-sided trade. Even though there's some upside right now, I still am firmly in the camp that we are in the midst of some fairly heavy volatility. And, you know, although we saw CPI today, which was kind of a dud in terms of price action in the marketplace, you got retail sales, jobless claims tomorrow, and that there again is going to spark some heavy movement in this marketplace.
So at this point now, I want to get to a name that you're following, and that is Intel. This is going to be your first trade, and wondering what you're thinking here. A name that has been walloped, right? I mean, let's not leave that out. This is down, what, 30%, has left shareholders wanting, going back decades. What's going on here?
Yeah, Intel right now down, but definitely not out. So I'm actually going to kick this off with a little bit of a bullish trade, but a very cautionary bullish trade in this particular case. I would look for anything at this point out of Intel to actually spark a rally, whether that's going to be job cuts, you know, dramatic corporate restructuring in here. And again, just being forward looking, anything that could spark some type of a rally right now. And as such, what I'm doing is actually putting on a call ratio back spread, which is the kind of trade where, look, if we continue to see some sell side activity, we're going to be fine. If we get the rip and rally that I would anticipate in the next couple of weeks, this trade will actually have some legs and can work. So on this Intel trade, I'm going to go out to the October 18th expiration, give ourselves plenty of time. What we do in a back spread is we're going to sell a 21 call. Again, OC 18, we're going to sell a 21 call, and then we're going to buy 2, okay, of the 23 calls. And the trade is actually put on for a 17-cent credit. The trade, of course, has risk. It does have risk, right? It's what we term the valley of death in the trade. But if the marketplace continues to sell off in Intel, we'll be fine. We'll keep the 17-cent credit. If we start to rally, we need to explode higher above like the 24 half region. And we'll see degrees of profitability everywhere from 21 to 23 is risk in this trade.
Yeah, understood. Let's hear what Ben has to say about the technicals. Ben.
Yeah, Nicole, Don, you had me with cautionary, and then you lost me with bullish because we're in a bit of a trend lower here across multiple time frames. I'll show you exactly what I'm talking about. Let's dive into, first and foremost, I've got a 4-hour candle chart queued up for us so we can see the price activity this year since we sold off from that $51 level to begin the year. You can see that we're holding down around 20 right now. We just had a violent move lower in reaction to quarterly results, and taking a look at some of the price activity. In fact, last time we looked at this stock, we were talking about areas of value that have been moving lower, continuation more likely than change. We talked about the 2 phases of development, and look what happened. We broke out of this balance area we had been forming around 31. And in fact, what's going on here? Well, it appears as if we're establishing a new one at a lower level. So exactly what the bears were looking for. Speaking of, we're going to add a little time onto the chart here and just take a look here. 4-hour candles. You can see again some of the migration of value to the downside: 48, 44, 31, 20. So right now, that line in the sand in terms of the working assumption that we're trending lower, values moving lower, is at 31. This all started back when we double topped, if you remember, 2020. We're talking 2021 up around that $67, $68, $70 level, balanced out around 55, broke down in a vicious way, sideways around 40, we'll call it, pretty well-defined upper extreme around 60, and then most recently breaking through this really well-defined lower extreme from the end of 2022, beginning of last year. But look at this, big move lower, vertical phase to the downside. This is a weekly candle chart under pressure. Again, if you're bullish this one, you're trading counter trend, simply put. You're not letting the market do the work for you. You've got to be a little bit more head on a swivel, so to say, I guess. So I can understand approaching it through options, but definitely the trend's lower here still, it looks like.
Yeah, without a doubt, when you see those bearish signals happening. I mean, Don, what would you tell the long-term investors in Intel?
First of all, I actually agree with Ben, which it pains me to do so, but I definitely agree with Ben on this one. This stock is down, but again, it's not necessarily out. Look, for a long-term investor, this company needs to shake something up right here, right now. This is life or death for those investors. Most of them, though, in the weak hands, they're out. It's a 30% move to the downside, in the quarterly results. All I'm doing is looking for the bounce back. I'm anticipating that they have got to do something to bring share price well north of this 20 level. And that's exactly the way I'm trading it. I'm not taking real risk to the downside. Again, the trade is by design, looking for a bounce, and won't necessarily fail if it doesn't get it.
All right. Next up, we're looking at JPMorgan, one that is more of a darling. When we have guests who come on, they often pick JPMorgan. They recently rolled out an AI assistant using powered by ChatGPT. Lower rates may be coming. Where do you think JPMorgan's headed? It's at 208 today.
Yeah, this most recent bounce, I'm going to fade it. Right. So this is what I term kind of a quintessential bounce and fade trade. So JP Morgan, seeing some decent sell side activity with the rest of the marketplace a few weeks ago, is on a rip to the upside right now. I mean, just traded 190 straight up to 208. All I'm going to do right now is step in and fade the move, which means get a little bearish in the midst of this particular up move. Again, kind of what I term a bounce and fade trade. So for this, I'm going to go out to the September 20th. It's a little shorter duration, right? Sep 20, I'm going to be buying the 210 puts. Again, buying the 210 puts, selling the 205 puts. So it's a $5 wide put spread. It's called an in-out spread, one strike in the money, one strike out of the money. It's a $2 debit. Okay, not necessarily a longer term trend, just looking for that kind of quick and violent pullback. I believe we're still heavily in the midst of some volatility in this marketplace.
All right, let's see what Ben has to say about the technicals. Take a look at the chart, please, Ben.
Well, Don, living true to his name, the ultimate contrarian, right? This one's trending higher across multiple time frames. So again, not surprised to hear Don say that he's fading this. Let's get into, first and foremost, the rip he mentioned we've seen over the last few days. You guys were talking about, Nicole, I think you mentioned the last 4 days in the S&P is the best we've seen all year. Well, JP Morgan's benefited from that up to 209. You can see we're not rejecting these upper levels as of yet. Bottom left, top right. I didn't go ahead and map out the consolidation areas because they weren't really well defined here, but I think it's undeniable that this stock is trending higher on this 5-minute candle chart. And again, no rejection. So now we can step away from that. Let's add a little time on. Last time we were on the show talking about JP Morgan, we were talking about a horizontal phase. We were breaking out of to the upside into July. We topped out around 217. It looks to me, Nicole, like while we have seen some price decay, whoops, hold on, I'm not sure why that, oh, hold on, this is supposed to be maybe this chart, there it is. We really haven't broken down below any key levels. We retested 190. That was a key area that we established when we were balancing up around this 210 area, we'll call it. And so, again, to get back up above that right now would open up a door for a retest of 217. It would actually start to exhibit a little bit of strength. And one more chart for you, just adding a little bit of time on here. I want to show you what's going on. Look at this. Again, just a different look at that same move up. We talked about the vertical breakout up and through that balance that had formed around 190. And now, again, this could be very healthy for the bulls. 210 is a key area. I'll give it to Don. If we stall out here at 210, we're kind of in this stuck random type range-bound trade, but build momentum, build energy up and through this key level here that we're testing right now. Yeah, I feel like we could be off to the races again. Not only test 217, but give what the bulls are looking for, a breakout above that and then a new area balance forming at a higher level. This could be, again, the start of something big here for JP Morgan. We're at a key level.
Yeah, and look, people would love to see that if that were in fact the case. Don?
Yeah, Nicole, Ben, I mean, look, one of the things that you guys just mentioned is the hallmark of volatility, the ripping up moves that we're seeing right now, some of the largest up days. Again, I'm still under the assumption that we're in an extraordinary volatility event. And this most recent up move, again, I think is much more evidence of that. So this is where you got to step in with defined risk and fade some of those up moves, looking for that volatility to come back in. This marketplace is going to trade just on a hairpin trigger because of things like retail sales. We're looking for any economic data that could actually rock this marketplace. And we might get that as early as tomorrow.
All right, next up we have silver. You're looking at the silver ETF. We just saw gold at some new highs recently. Why is this one standing out to you in the world of commodities here?
Yeah, right now, silver is not necessarily tracking along with gold, but I think could actually play catch up in a hurry. So you can see silver kind of fading a little bit recently. And I'm going to take the other side of that one as well. I'm actually going to put on a bullish trade, again, a bullish trade inside of silver, predominantly because we still see some economic risks ahead. And, you've got the election, you still have geopolitical risk. I got everything coming literally later this week. Jackson Hole a few weeks out, it's going to be some wild volatility. And I think that metals are still going to be relatively strong. Look, gold might be breaking out to the upside and breaking new highs, but silver, as I said, has some catch up, some room to the upside in here. As such, I'm going to go out to the November 15th expiration. I'm going to give myself plenty of time in this trade. I'm going to be buying a 26 call. Again, buying a 26 call, selling a 31 call. So a nice $5 wide spread in the SLV. It's a dollar debit. It's got a great risk reward. If silver does, eventually kind of migrate to the upside and really kind of break out like gold has done, I think you have yourself a nice trade in this one. Again, weakness in the dollar is also, it's not hurting this trade. It's just a matter of silver playing catch up.
All right, let's get some final thoughts here. Ben?
Okay, it took him a little while, Nicole, but it looks like on this one he is going to join in and participate with the trend that we're seeing to the upside here and not fade this longer term bottom left top right pattern we're seeing. And we're actually seeing it on the 15-minute candle chart as well. So let's begin there. You can see it was just a week ago that we were trading around 24, recently up to 25.60, holding this upper level. And in fact, testing a key area of support right now. We always talk about in a bull trend where those opportunities to participate in the trend come into play. Well, they're tests of a lower extreme of balance area that are forming that fail. So again, if we hold this level right around $25, hold this level, build some momentum up and through this $25 level, again, we're $25.35, I should say, we're right back onto that bullish vibe that we had been seeing in silver prior to the recent sell-off. Now let's take a look at that recent sell-off because we came off 29, if you remember. So it's not just 25, but really to get confirmation that we're starting to turn things around, establish a bit of a bottom, you want to see them take out 26. So a couple of big areas that are lying just above where we are right now that could establish some major lines in the sand that could, well, get, erased, simply put. So let's move one more time away from this hour candle chart. So we've gone from a 15-minute, I think it was actually, to a 60. And now here you can see a daily candle chart. We talked about buying lower extremes of a balance area that's forming in a trend up environment. Well, you can see on this daily candle chart exactly that happening. 18 is where we balanced out into the end of 2022, beginning of 2023, high conviction move up. You can see that we formed value around 23. And then again, in this staircase type pattern, look, 27 has been kind of middle of the range we've been in, well-defined lower extreme, just establish a higher low, lower high. So this range is kind of narrowing, but built momentum through 27 here. You open up a door for a retest of that high from, earlier this spring up around 29.30.
All right. Thank you both for the big three. Intel, JPMorgan, and the Silver ETF. Great to see you both. Don Kaufman, Theo Trade, and our own Ben Lichtenstein there on the charts. Appreciate it. Thank you.